Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into the annual shareholder report for Delaware Group Equity Fund's fee. Sounds boring, right? But stick with me, because inside this report are clues to whether this fund is making smart choices with its money, or if it's like that friend who's always investing in the next big thing and somehow always loses out. We are going to get into the details of the Macquarie Wealth Builder Fund. Get ready. It's time to start decoding. This is a form called an N-CSR, which is a certified shareholder report for investment companies. Think of it like a school report card, but for grown-up money. This report card covers the year that ended on November 30th, 2024. We're looking at the Macquarie Wealth Builder Fund, specifically the Class A shares. You might remember this fund as the Delaware Wealth Builder Fund. They changed the name. Class A shares have the trading symbol DDX. It's like a secret code, but for stocks. This report has all the important info about the fund for the year, from December of 2023 to November of 2024. The fund's performance and cost numbers are based on numbers where they had to fix some mistakes in the financial reports for the previous year, so it might not be completely representative. If you are super curious, you can find more info at macquarie.com/literature. Or you can call them and ask questions. This report will tell you about changes to the fund, but some of the changes may be in a special section for those items. So how much did it cost to run this fund? For Class A shares, if you had $10,000 invested, the costs would be $87. That's like paying 79 cents for every $100 you have in the fund. Let's see how the fund actually did this past year. The Macquarie Wealth Builder Fund Class A shares had a return of 20.14%, but that is before taking into account sales charges. Now, during that same period, the S&P 500 index, which is a measure of how the stock market in general performed, did even better, rising by 33.89%, and the Bloomberg US Aggregate Index, which measures the bond market, did not do as well, only increasing by 6.88%. What helped the fund do well? U.S. stocks and credit-sensitive bonds rose because inflation slowed down and the Federal Reserve started to cut interest rates. Stocks that pay dividends and real estate investment trusts, or REITs, did well compared to the fund's benchmark, thanks to excitement around artificial intelligence and attractive real estate values. Being overweight in credit-sensitive fixed income, such as U.S. high-yield bonds, also boosted performance.
What didn't do so great? International stocks and money market funds held the fund back.
This section will show you a graph to compare performance, so we can see how well the fund did over the past 10 years. The average annual total returns as of November 30th, 2024 are also listed. The Macquarie Wealth Builder Fund Class A, including sales charge, returned 13.21% in the last year, 6.32% over the last 5 years, and 5.28% over the last 10 years. Without sales charges, it went up to 20.30% in the last year, 7.58% over the last 5 years, and 5.91% over the last 10 years. Remember that past performance doesn't guarantee future success. It's like looking in the rearview mirror. It tells you where you've been, not where you're going. For the most up-to-date performance numbers, check out macquarie.com/performance. The fund changed its broad-based securities market benchmark indices to the S&P 500 index and Bloomberg US Aggregate Index. Although the S&P 500 index and Bloomberg US Aggregate Index can be considered broadly representative of the overall securities market applicable to the fund will continue to show the performance of the blended benchmark for comparative purposes because Delaware Management Company, the fund's manager, believes it is more representative of the fund's investment universe. It is like saying, we changed how we measure ourselves, but we'll still use the old ruler too. Here are a few more facts about the fund. The fund has about $903 million in net assets. They own 807 different investments. The advisory fees paid to the fund's manager totaled about $5.4 million. The portfolio turnover rate was 66%. So that means that the managers bought and sold a lot of investments, compared to the total value of the portfolio. Now, what exactly is this fund invested in? almost 59% is in common stocks. A little over 11% is in corporate bonds. About 6% in mortgage-backed securities. About 5% is in exchange-traded funds and short-term investments. The fund has a lot of money invested in Nvidia, Apple, and Microsoft. Something that has changed in the fund. As of December 31st, 2024, Delaware Wealth Builder Fund will be renamed Macquarie Wealth Builder Fund, which means the fund has a new name. This is a quick summary, so if you want all the details, you can check out the next fund report around April of 2025, or just give them a call. And Class C shares are also being renamed Macquarie Wealth Builder Fund instead of Delaware Wealth Builder Fund. For Class C shares, if you had $10,000 invested, the cost would be $170 compared to $87 for the Class A shares. That's like paying 54 soys for every $100 you have in the fund. Macquarie Wealth Builder Fund Class C shares had a return of 20.23%, but that is also before taking into account sales charges. The same thing that was said about Class A is the same here too. U.S. stocks and credit-sensitive bonds rose because inflation slowed down and the Federal Reserve started to cut interest rates. International stocks and money market funds hurt the fund overall. The Macquarie Wealth Builder Fund Class C, including sales charge, returned 19.23% in the last year, 6.75% over the last 5 years, and 5.10% over the last 10 years. In connection with new regulatory requirements, the fund changed its broad-based securities market benchmark indices to the S&P 500 Index and Bloomberg U.S. Aggregate Index. Just like with the Class A shares, it is keeping its old measure too for reference. For Class C, the fund statistics are about the same as Class A. They also own the same percentages in various types of assets as well as the top 10 equity holdings. Like with Class A, it is just getting a new name. And Class R shares are also being renamed Macquarie Wealth Builder Fund instead of Delaware Wealth Builder Fund. For Class R shares, if you had $10,000 invested, the cost would be $159, better than Class C but worse than Class A. That's like paying 1.04 for every $100 you have in the fund. Macquarie Wealth Builder Fund Class R shares had a return of 20.42%, but that is also before taking into account sales charges. The same economic forces are said to have had a positive impact on the fund, like with Class A and C. U.S. stocks and credit-sensitive bonds rose because inflation slowed down, and the Federal Reserve started to cut interest rates. International stocks and money market funds hurt the fund. Bloomberg U.S. Aggregate Index, the fund's broad-based securities market indices, returned 6.88% versus the S&P 500 index return of 33.89%. Again, the familiar comparison graph appears. The Macquarie Wealth Builder Fund Class R, including sales charge, returned 20.42% in the last year, 7.30% over the last 5 years, and 5.64% over the last 10 years. Don't predict based on the past. This is important. The Class R shares has roughly the same number of holdings and AUM as the prior two share classes. They also own the same percentages in various types of assets as well as the top 10 equity holdings. The class is having its name changed, per the above classes. The institutional class is getting a new name too, Macquarie Wealth Builder Fund instead of Delaware Wealth Builder Fund. For institutional class shares, if you had $10,000 invested, the costs would be $60. Macquarie Wealth Builder Fund institutional class shares had a return of 21.16%, also before taking into account sales charges. Like the other classes, U.S. stocks and credit-sensitive bonds rose, and so did the S&P 500 Index and Bloomberg U.S. Aggregate Index. The Macquarie Wealth Builder Fund institutional class returned 21.16% in the last year, 7.85% over the last 5 years, and 6.7% over the last 10 years. Again, for broad market comparison, they've changed to S&P and Bloomberg indices, but keep showing their old reference too. They hold roughly the same AUM and number of holdings. Again, same assets and percentages across all types of investments. The class is getting a new name. And finally, Class R6 is also being renamed Macquarie Wealth Builder Fund instead of Delaware Wealth Builder Fund. For Class R6's shares, if you had $10,000 invested, the cost would be $52. Macquarie Wealth Builder Fund Class R6 shares returned 19.78%. That excludes sales charges. Due to how recent this class is, the performance here is shown differently. The graph compares returns from launch to November 30th, 2024. The Macquarie Wealth Builder Fund Class R6, including sales charge, returned 19.78% in the last year, and since its inception in 2023, it has returned 14.27% annually. Like the other classes, to new indices and still showing the old one too. Similar fund statistics, it's the same fund after all, just different levels of fees and access. The same portfolio and holdings. As of April of 2024, the fund has a new fee waiver of 0.73% for Class R6 shares. Finally, new name for the fund here as well. Now, putting it all together, what do we think of the Macquarie Wealth Builder Fund? The fund seems to be in a bit of an identity crisis, with the new name change and benchmark indices making it seem like it's trying to find its place. On the plus side, they've got a lot of assets under management. With big holdings in names like Nvidia, Apple, and Microsoft, the fund is riding the wave of some pretty solid companies. However, the fund also has certain risks. A large chunk of its assets are not very liquid, and a lot of its derivatives could lead to unforeseen losses. And the managers were pretty active buyers and sellers, which is great if you pick winners, but not so great if you get it wrong. If you're considering investing, the fund really needs to start outperforming its benchmarks. And if it can't do that, is the lower expense on the institutional shares really worth it? Based on all of this, the fund falls into a neutral zone. A target price range is tricky given the overall market, but a fair value NAV here may be between $14 to $16. Keep an eye on their next few quarterly reports. If you found this corporate decoder useful, then subscribe, like, and comment.